Hello, welcome to my channel. My name is Patrick. Today we take a look of this public bank. They released their financial report. This is the latest financial report. Let's start from this balance sheet, asset and liability. Okay, let's start off with the asset first. You see total assets here is 461 million. Okay, what is the biggest of this all? You will notice that it's belong to this one, close to 350 billions. Why this? This is a loans, advance, and financing. Mean to say, when you borrow money from the banks, like you want to buy a house, it belong to this category. To you, it's a debt, but to them, it's an assets. So it's the main things that bank will generate income from this loan, advance, financing. Not only loans like the OD or share margin financing, everything regarding bank charge you interest, the money belong to here. The debt you owe to the bank belong to here. And the quality of the asset also important to see how many are going to be default and things like that. So it's also important for banks to select their customer, to choose a good loan to offer. Not every loan is good loan. Sometimes if you get a very big default, then you will incur loss in your profit and loss statement. So let's go to this liability. Liability for banks now for this public bank is 412 million. What is the biggest of this all? Is belong to deposit from customer. Okay, so this deposit from customer is like the money you save in the bank, your FD, your current account, your saving account, regardless whether they pay you interest, is belong to here. FD they pay you interest, but some current account don't have any interest, also saving account. Deposit from bank, this one is from, because this is belong to a group of public bank. Other banks like Islamic banking or their brokerage firm, also other bank also put money in this public bank group. So also belong to here, they need to pay interest. So all this liability, all these are the liability, which the bank need to serve interest. If they serve less, which is good for them because they can generate more interest income. Let's go to this one, equity. Equity is you take the total asset, just now we saw total asset, minus out the total liability, you will get this total equity. Okay, this money, this equity fund belong to the shareholder. So the bank need to generate returns for you. So ROE is return of equity. We need to use this important number to count how many percent of return has been generated to the shareholder. Normally for bank is like 10%. Better one can be as high as 17%, like in the US bank, JP Morgan 17%. Some bank are 13%. So these are the general ratio. But some very small bank like Affin Bank, their ROE is only like 5%. So different bank have different way of generating profit. Of course, the higher the better, but also need to be careful of the quality of the loans. So this after you got this amount, total equity, you minus out, you divide by the number of outstanding share, you will get NTA. Okay, this is the NTA. For public bank currently is 2.42, but current price is around 4 ringgit. So why people pay higher than their NTA? Because they see a premium. They see this is a good quality bank, and banks is able to generate above than average income. So the market pay a premium. But when you look at Affin Bank currently the share price is way below NTA. One of the reason is their ROE also low. Quality of the asset not as good as public bank. So let's take a look of this profit and loss statement. Okay, as you can see here, their profit and loss for the group operating revenue, there's a drop of around 5% compared to last year, same quarter. For the 9 months, also dropped a bit. Okay, why? Because I think it's related to the lockdown we had in July. There's a 2 weeks lockdown, and our reopening has been on and off. So it will actually how to say, it will slow the loan performing and loan growth. Another also is our property market, especially in JB. There are a lot of property is stagnant, especially those condo cannot sell. A lot of lelong going on here. So the property market also affect their interest growth, their sales growth, which is their loan growth, is important. So you see their interest income drop as well, and interest expense also drop, because good thing interest expense drop because they don't need to pay so much interest to their customer in their liabilities. So they are able to generate a spread. This one is called the between, here is the spread. So they are able to generate 2 billion profit for their shareholder. So when you look at my first video, I actually mentioned about the 10 years yield. So how it affect the bond profit, the bank's profit. When you have if your 10-year yields go higher, and bank loan actually serve for long term. You pay for 10 years, 15 years for houses. Some can go up to 30 years, 35 years. So when the higher the longer duration bonds, right? For the bank, you will have higher interest income. This is why the 10 years yield will affect the bank to have a better profit when it get higher. So of course, when the OPR rate increase, the FD also need to be increased. But in terms of the spread, it will get wider. So for this net interest income, 2 billion. Other Islamic banking business, 200 over million. Add up together, 2.4 billion for this quarter alone. Then they have another income, which is their fee-based. Fee-based income, you can split into two for bank business. There are two main business. One is the interest income, okay? The other one is fee. All the banks are the same. For fee-based, like when you walk into any banking halls, right, you will meet some bankers. They will push you for some products like insurance, ask you to buy insurance, buy unit trust, all this. So all this money, when you buy from them, they will charge you a fee. So all this fee you will display here. Currently, this quarter they earn 750 million. Not only like banks products, they also like insurance and also other brokerage fee. When public bank, they have this public brokerage where you can buy and sell share, and also they have fee from their public investment banking, which they help their corporate client to raise fund, to do IPO, to write research paper. All this belong to here. Okay, some also think like SBB, the IB investment banking, they can short sell the share. So for them, it's very easy money. They literally can earn money from thin air. For for normal listed company, they need to operate. Set up factory and all this. But for banking, they just sit in front of their desk, click a few buttons, then can generate income by short selling the share. So regardless the market up and down, they can earn profit. This is one of their profit here. And the expense, of course, they need to pay commissions to their staff, and also some product they don't carry, like the insurance, they need to pay to the insurance company. So minus off the expense, this is the net they get, net fee they get. So when you add up these two, generally add up these two minus off the expenses. So these expenses is important. These are the fixed costs for the bank. The lower the fixed cost, the better. I mean to say they are more efficient. When you take this amount, you divide by this operating revenue, you will find out that for public bank, their expenses is around 20% of their total revenue, which is very good. They didn't hire a lot of staff, but they are able to generate very good income. Of course, in future, when digitalizations, more banks are using more digitalization, then branches will be will be closed. Those are not efficient one. The banks, the branches will have less and less. So this in future, I think this can further reduce when the bank adopt the digitalization. Okay, so this now you come to this allowance for impairment on loan, advance, and financing. So this is about the quality of your asset. Just now we saw previously the bank lend you money. So the quality of this asset, you can take this amount, divide by, just now we saw the amount. So you can see what is the impairment percentage of the total loan amount. Okay, so this is actually the lesser the better. For public bank, they are very selective for their customer. So generally, the ratio is gross impaired to loan ratio is about 0.33%, which is very good for public bank. Okay, the other bank need to check. Different bank have different way of operating, and they have different kind of segment of their customer. Like public bank, most of their customer are Chinese, business owner, all these. Okay, so that's why their quality of the asset are better. Okay, and after that, you will find out that this the profit for the equity holder of the bank is 1.3 billion, which is here. Okay, this is belong to the shareholder. Okay, when you take this amount 1.361 million, you divide by this 4812. Okay, 1.361 divided by 4812, you will get the net profit margin of 28.28%. Okay, so which is very high for any company. They can generate this kind of net profit margin for long term is a very good business. So this ends my sharing for today. We'll look into more of this in-depth analysis for this public bank and also other bank. So stay tuned and subscribe my video, share it with your friends. Hope you like it. Thank you so much.